We see a lot of business owners who go and open personal type accounts, checking accounts, credit card accounts, those types of things in order to run their business, but it's really not a good idea.
A mistake I see clients making often is not having a proper accounting or bookkeeping system in place. This is a problem because it really makes it difficult to manage your business finances. It also makes it hard to make those management decisions or even scale your business and delegate some of those financial tasks to other staff members or outsource it to other accounting, bookkeeping, or tax professionals. It also makes it very difficult to automate those financial tasks, meaning it may take you a bit longer to handle those compliance services such as tax. A solution to this problem is to use a proper accounting or bookkeeping system to help you automate these financial tasks. A solution like this generally syncs with your financial institution, meaning that it will pull in all of your banking transactions and with the click of a button, put them into a format that can be used to handle your compliance services like taxes or to print off financial statements so you can make those key management decisions. One problem I see clients making all the time is following tax advice from social media. The problem with this is that taxes isn't a one-size-fits-all thing, and a 60-second clip may not cover your particular tax situation. This is also a problem because the U.S. tax code is about 7,000 pages long, and that doesn't include your state. A solution to this problem would be to speak with a trusted accounting or tax professional. And when I say trusted, I mean your CPAs, your enrolled agents, your tax attorneys, and even your registered tax professional.
One of the top mistakes that we see new business owners and even some experienced business owners make is that they commingle funds between their business and their personal accounts. And this is problematic for a variety of reasons. Number one, it has the potential to pierce the corporate veil. And I'm not an attorney, so I definitely recommend that you go talk to your attorney about this. But basically what piercing the corporate veil means is that there is now no distinction between you personally from a financial perspective and the business. And if you were to get sued, potentially the person who is suing you could go after your personal assets, and then you lose that protection that you get from having some sort of an entity like an LLC. Number two, it gets a little bit difficult to bifurcate the business expenses and revenue from what's happening personally. And when I say difficult, what you should really hear are cha-ching dollar signs, because somebody at some point is going to have to unwind that. It's going to be expensive. It's going to be time consuming. It's going to be cumbersome. If for no other reason, the need to unwind that will be to file a tax return, number one, but then number two, just understanding how the business is actually operating. It's going to be very difficult if you're commingled. It's number two. Number three, we see a lot of business owners who go and open personal type accounts, checking accounts, credit card accounts, those types of things in order to run their business. That sounds like a good idea, and it might be easier to get credit that way or to open an account that way, but it's really not a good idea, because if you want the business to build its own credit and use its own credit and be credit worthy, you have to have the credit type accounts, loan type accounts in the business's name, using the business's EIN, and then use institutions where those accounts and those transactions are reported to credit monitoring agencies. Another issue that we see from small business owners is not understanding how, when, and why your business pays taxes and the variety of taxes that it's going to pay, as well as how the business income affects your personal tax situation. But then also that limits your planning ability, because you don't have time or the knowledge to plan for these events, to ask somebody the hard question. I know that the numbers on the page can be a little bit scary, but it's the best tax advice that I can give anybody. Sit down, read your tax return. It'll help you understand how the numbers flow, where things go and why. And honestly, it'll just help you ask better questions of that trusted tax advisor.
One of the mistakes that I see business owners making is not keeping proper documentation. What's the problem with this? Well, you can miss tax deductions altogether, and the tax department, if they review your tax return, they may disallow those expenses if you can't provide the backup for them. Make sure that you create a process that works for you to keep those receipts. This could be an electronic process, and that's what I recommend because it will save your files for the longest and avoid deterioration of your paper receipts. Now, if you're not used to keeping your documents and you're having a hard time getting that habit going, you can use a technique called habit stacking. This is simply taking a habit that you already have down pat and doing your documentation at the same time. Another mistake that I see business owners making is not saving for their taxes. Now, as you can imagine, this can lead to surprise costs when you have to pay interest and sometimes even penalties on money that you owe at the end of the year. Calculate your taxes regularly throughout the year. Once you've calculated your taxes, you want to transfer the money into a separate bank account so that you are always reassured that you'll have the money at the end of the year to pay your taxes. If you're not sure how to calculate your taxes, you can talk to a tax professional or you can look online. There are tax calculators out there on the web, and you can use those to estimate how much tax you owe.